welcome to Killick & Co's podcast for the 24th of March. Last week we had a steadier week for equities. You may recall that the previous week the FTSE 100 was down around 3%, tensions building in Ukraine and also some further issues in China impacting on some of the commodity prices had led to those falls. But last week, with the recovery of poise of some extent, the FTSE closing up around 0.5%. We did, however, have some events from last week worth mentioning. Janet Yellen hosted her first meeting, and some thought that she did make some comments that were quite market moving, and we'll take a look at the charts as to where those moves were felt. But let's take a look to the week ahead. We'll start off with events already taking place on this Monday morning. It's the PMI data, the Purchasing Managers Index for Europe. First of all, we have data out of Germany and France. Interestingly, France was a big surprise to the upside. We saw very strong data from France, and that counters some of the weak data that we've seen over the course of the last few months. Germany was a small miss, but overall the Eurozone PMI data coming in broadly in line. If we look further ahead this week, in terms of the scheduled diary, it is a little bit quieter. For the UK, it's all about UK retail sales, that number being produced on Thursday of this week. You may recall again that the data in February was poor. That has come through in some of the trading reports that we've seen from businesses in the retail space. As more bounce back is expected there. And we also have UK GDP on Friday. In terms of businesses reporting, tomorrow we hear from Wolseley, the builders merchants. It should be a stronger picture from Wolseley in Europe, but the US may well have been impacted by some of the extreme weather for the last couple of months, so we expect them to report on there. On Thursday, Compass Group, been a very steady performer. Do take a look at the chart of Compass. It has been a consistently strong performer, and we're expecting that trading update due out on that time. So let's start off with some of the charts from last week, and it was indeed the US 2-year yield which moved most markedly on Janet Yellen's comments when she was speaking at the FOMC conference. Under question, really what one's trying to do is ascertain what the Fed means by a long period of time. And she did actually say 6 months. That was shorter than many had expected. And so you saw quite a material move in the yields on 2-year yields moving higher. You can see the sort of extent of this fall. This wasn't itself present in the 10-year. You can see the 10-year over that period of time remained pretty much unmoved by the whole process, which is as you would expect from that. But you can see the significance of that statement on the 2-year, going back to that chart, that it didn't reverse and did cause quite a wobble for the stock market during the course of Wednesday. So we're certainly seeing some heightened volatility in markets at the moment, not just a combination of comments from the Fed, but also we're getting a daily dose of news out of the Ukraine, and also keeping a watchful eye on movements in China as well. Coming back to a few stocks, we are interested in Amazon. Amazon, you can see from this chart here, has sort of pulled back recently. It's not a cheap stock, but we feel that the server-based business side of their business, which is developing and will take, we think, a very meaningful role in the whole area of cloud computing, was a top pick from one of the top tech fund managers that came to see us last week, and we certainly would be in line with that particular view. As I say, having peaked out close to $160, back down to $139, we're putting a note out this morning thinking that's a good buying opportunity for Amazon. Just in terms of the retailing space, Tesco continuing to not find the floor in its share price, back below 300 pence, down at 292. This move by Morrison's has really, as I say, caused the spark in the sector, and it's just interesting to note that there has been no rebound in Tesco's. The market is looking for a response from them as to what they expect to do. Over the weekend we did see Centrica mentioned as one of the big six energy companies. There is thinking this week that the group will be referred to the new Competition and Markets Authority by Ofgem, and with a possible recommendation of a breakup. It's still in the consultation phase, but Centrica's price has rallied off the low of late. You can see here the sort of rally that we have seen of late, and this was after quite significant falls, which started at the time of Ed Miliband's cost of living speech back at the end of September. This renewed rally in this sector we feel might be a good opportunity to lighten holdings, as we still think the uncertainty will persist for some time to come. Just finally, we did launch last week a new thematic recommendation. There is a separate video on this. This relates to smart industrial technology. A couple of stocks that feature within that list. There's Derb, which is a German stock. Again, this has come back from 160 back to 130 euros. We think that's a good entry point for this leader in automotive robotics. And finally, Gemalto, which is a leader in machine-to-machine communications. Around 9 billion machines talk to each other without human intervention. That is expected to grow to 50 billion machines by 2020. And Gemalto are the number one in the security around machine-to-machine communications. So again, those final two stocks featuring as part of a note which you will see in your inbox, or do speak to your broker if you would like a copy.